Dear commerce students, after a long days, I would like to continue my accountancy class. Today, I would like to teach plus 2 accountancy chapter cash flow statement. Dear students, many times I have explained about the importance of cash flow statement and ratio analysis. See, what do you mean by cash flow statement? Cash flow statement, it is a statement which shows cash inflows and outflows of business during 2 periods. There are 3 major headings or activities in cash flow statement. First one, cash flow from operating activity. Second one, cash flow from investing activity. Third one, cash flow from financing activity. These are the 3 major activities or headings to be done in a cash flow statement of an organization or company. See, what is a cash flow statement? That is operating activity. Operating activity is nothing but it is just running or maintenance of business. It is a sum total of profit or loss, then some charges like depreciation, increase in asset, decrease in asset, increase in liability, decrease in liability. So we have to find out the net operating activity of the organization or concern. Next topic is or activity, cash flow from investing activity. See, investing activity is nothing but it is the case of purchasing new assets and selling the old assets. So whatever may be the new purchase of fixed assets like land and building, furniture and fixtures, plant and machinery, motor vehicle, etc. That one will be treating as a cash outflow. Cash outflow means we are making payments for purchasing something. Something means here it is purchasing fixed asset. When we purchase fixed assets for the organization, we have to spend money. So that is called outflow of cash. On the other hand, if we sell our old assets, we will get cash from the sale of old assets. That is called inflow. So outflow means cash payment. If you make any cash payment towards the purchase of new assets, or if you make a payment for discharging liabilities of the business, that time it will be an outflow. So if we receive cash by sale of assets or sale of goods, whatever may be, anyhow, if you receive cash, that will be called inflows of cash. That is cash receipt, all cash receipt or all cash earnings, especially revenue, will be treating as inflows. And all cash payments towards the purchase of a fixed asset, towards the expenses or whatever may be, many more expenses will be coming in a business. All those items, cash payment items will be treating as outflow. So in case of investing activity, we will deal only with the purchasing of fixed assets as well as selling of old fixed assets. So purchase of fixed asset means when we purchase any asset for the business, we have to pay cash. That time our business cash balance will decrease as it is outflow. On the other hand, if we sell our old assets or anything in the business, we will get cash. That will be the inflows of business. Next, third heading or activity is financing activity. Financing activity is the activity which deals with financing items. Financing items means we will take a loan from bank, we will issue shares to public, we will issue debentures to public. In these cases, we will get cash. So while issuing shares, public will send money to our bank. So that is a case of inflow. And when we take a loan from bank, we will get cash. That is a case of inflow. When we issue debenture to the public, that time also we will get cash. So these three cases are inflows of business in case of financing activity. So whatever may be the outflows, so issue of share is an inflow. We will repay share money to public or shareholder. That is the case of outflow. We will repay loan with interest. That is the case of outflow. Then we will we will make repayment on debenture money. That also outflow. So now I can explain what to do with inflows and outflows. First of all, we have to understand from the question whether it is inflows and outflows. Sometimes the CBSE will be asking questions to do particular activity, maybe operating activity, maybe investing activity or financing activity. So you are the students, you must know what are the items which fall under operating activity, investing activity and financing activity. One thing is sure, investing activity only the purchase of fixed assets as well as sale of old assets will be dealing. Financing activity, it deals only with issue of share, issue of debenture, taking loan and its repayment. Getting money into business is called inflows. Paying money, it is called outflows. So all these three categories, operating activity, investing activity and financing activity, we have to get a separate total. Then after getting separate total, we have to add these three figures. Operating activity total, investing activity total, financing activity total. We have to make it together. We have to get the added result. After getting added result, till financing activity, we have to add up opening cash and opening bank balances together with the total of three major activities. So that time we should get the closing cash and bank balances as it is given in the balance sheet. Then only we will understand our answer is correct. If you are not getting closing cash and closing bank balances already given in balance sheet, so it will show somewhat a difference. Some adjustments would have wrongly done. So we have to take care of doing the solution related to cash flow statement. All inflows of cash must be added, and similarly all outflows must be deducted. This is the case of cash flow statement. Okay students, please subscribe my channel, then like it and share it. So if you study cash flow statement, you will get a cash flow and a ratio, that is the second part, AFS, analysis of financial statement part. You will get 20 marks. So remaining 60 marks will be asking from partnership and company accounts. So you have to take care of your studies. I will come with another topic. My today's class is coming to end. Okay students, thank you very much for hearing my class.